When people talk about Ethereum, the conversation almost always circles back to one question: where's the price headed? Everyone wants that one number, that exact target, that magic crystal ball moment where you can look into the future and see exactly how high Ethereum will climb. And I get it, because this isn't just another token. This is Ethereum, the backbone of decentralized finance, the chain that powers billions in assets, the platform for NFTs, gaming, digital identity, and experiments we haven't even dreamed of yet. Predicting Ethereum's price isn't just about guessing, it's about understanding the future of the internet itself. So let's do this. Let's look ahead to 2025 and map out exactly where Ethereum could go. Along the way, I'll break down the adoption curve, the upgrades in motion, the competition, the risks, and of course, the big forces of the crypto cycle. And by the end, I'll give you my exact price target for Ethereum in 2025. First, let's ground ourselves in the present. Ethereum isn't some speculative side project anymore. It has grown into a global settlement layer. Every day, billions of dollars worth of stablecoins move across it. DeFi protocols lock up enormous sums that rival small banks. NFTs, while not as hyped as they were in 2021, still live primarily on Ethereum and its layer 2s. And the massive shift from proof of work to proof of stake wasn't just an engineering milestone. It changed the economics of Ethereum forever. Why? Because Ethereum is now deflationary at times. Thanks to EIP 1559, which burns a portion of transaction fees, and the reduction in issuance from proof of stake, Ethereum's supply can actually shrink the more it's used. Think about that. A global financial network where the underlying currency doesn't inflate endlessly, but in fact can become scarcer as demand rises. That's the exact opposite of the traditional financial system, and it sets Ethereum apart from nearly every other asset on Earth. Now let's talk timing, because timing in crypto is everything. Ethereum's next big chapter lines up with the larger 4-year cycle that has defined this industry since the beginning. Every 4 years, Bitcoin's block reward gets cut in half. That halving event reduces new supply, sparks bullish momentum, and historically kicks off a run that peaks the following year. The last major peak was 2021. The next halving is in 2024. That places 2025 right in the eye of the storm, the exact point in the cycle when markets tend to reach euphoric highs. But it's not just about history repeating itself. Ethereum has a roadmap packed with upgrades that will change how people use it. Words like proto-danksharding and data availability sampling sound like gibberish, but what they really mean is faster transactions, cheaper fees, and more capacity. If Ethereum's biggest weakness has always been its gas fees, the roadmap is designed to crush that bottleneck. Already, we see this future in motion with layer 2s like Arbitrum, Optimism, and Base. Millions of users are onboarding through these networks, and while they scale independently, they ultimately settle back onto Ethereum. So every time the suburbs grow, the city center gains value. Institutions are another piece of the puzzle. In 2024, we saw the first real wave of regulated Bitcoin ETFs hit the market. Billions of dollars flowed in almost overnight. The next logical step is Ethereum ETFs, and the chatter is only getting louder. If those launch, and I believe they will, the door opens for pension funds, asset managers, and family offices to buy Ethereum in a regulated wrapper. That's billions in potential demand from players who don't want to mess around with wallets and private keys. And here's the kicker: Ethereum has something Bitcoin never will: staking yield. Institutions can park their Ethereum, earn a yield, and hold an appreciating asset. That's a double incentive that makes Ethereum especially attractive for big money. So let's start talking numbers. In 2017, Ethereum went from under $10 to over $1,400. In 2021, it went from under $200 to over $4,000. That's exponential growth, the kind you only see in young, disruptive technologies. But as the market matures, we have to temper expectations. Ethereum isn't going to pull another 100x from here. That's just not realistic. But a 3x, a 4x, maybe even more. That's absolutely in the cards. Let's run the math. If Bitcoin climbs to a market cap of $10 trillion in the next bull run, a target many analysts consider, possible Ethereum doesn't need to flip Bitcoin to thrive. Even if it captures just a quarter of that value, Ethereum would command a market cap in the $2 to $3 trillion range. Divide that by the circulating supply, and you're looking at Ethereum trading between $10,000 and $15,000 per coin. That's my base case. Ethereum at $10,000 to $15,000 in 2025. It's grounded, it's realistic, and it's based on adoption, institutional flows, and the natural rhythm of the crypto cycle. Now, could it go higher? Absolutely. If ETFs roll out faster than expected, if Layer 2 adoption explodes, if gaming and NFTs onboard millions of new users, and if DeFi enters a new golden age, we could see Ethereum spike as high as 20,000 in a blow-off top. That would be the euphoric phase, the part of the cycle where prices overshoot fundamentals before eventually correcting. But that's what markets do, they swing between greed and fear. Now, before you rush out imagining yachts and moon villas, let's check the downside. Ethereum isn't invincible. Competition is real. Chains like Solana, Avalanche, and newer players are all fighting for market share. They promise faster transactions, lower fees, and in some cases, more reliability. If developers decide to build elsewhere, Ethereum's dominance could erode. Regulation is another big risk. Governments are still figuring out how to handle crypto, and if they decide Ethereum is a security or slap heavy restrictions on DeFi, it could slow adoption dramatically. And then there are technical risks. Ethereum's roadmap is ambitious, but if upgrades are delayed or bugs emerge, confidence could take a hit. So what happens if things go wrong? In that case, I see Ethereum topping out closer to $5,000 to $7,000. Still higher than today, but nowhere near the euphoric predictions. That's the bearish scenario. It's important to be honest about it because this market is unpredictable. But when I weigh the risks against the opportunities, the upside still shines brighter. Ethereum isn't just a cryptocurrency anymore. It's infrastructure. It's where billions in stablecoins move daily. It's where DeFi protocols recreate banks, exchanges, and lending systems without middlemen. It's where digital art, gaming, and identity experiments live. And every one of those use cases adds value back to ETH, because ETH is the fuel that powers the machine. The more people build, the more ETH gets used, and the more scarce it becomes. That's the core dynamic. Here's another way to think about it. In the early 2000s, people were trying to figure out what the internet was worth. Could it replace brick and mortar stores? Could it power global communication? Could it change entertainment forever? Back then, the numbers seemed absurd. Today, it's obvious. Ethereum is in a similar spot. It's messy, it's experimental, it's still clunky at times, but the potential is enormous. Betting against Ethereum today is a bit like betting against the internet in 2001. Sure, there will be crashes, failures, and competition, but the underlying trend is undeniable. So here's my exact target. Ethereum in 2025, trading between $10,000 and $15,000, with an outside chance of hitting $20,000 if conditions align perfectly. That's not hopium, that's a reasoned prediction based on history, adoption, and the reality of the market cycle. The bigger question is, what will you do with that information? Are you positioning yourself now when the market is quieter, or will you wait until headlines scream Ethereum to the moon and everyone is chasing green candles? Because the truth is, the best opportunities in crypto almost always come when things feel boring. By the time everyone is talking about Ethereum at new highs, the easy money is already made. So ask yourself, do you believe in Ethereum's role as the settlement layer of the new internet? Do you see institutions adopting it? Do you think developers will keep building on it? If the answer is yes, then you understand why my target isn't just a guess, it's a reflection of where this technology is headed. I want to hear your take. Do you think 10 to 15,000 is reasonable? Do you think 20,000 is too conservative or too optimistic? Or do you think Ethereum is overrated and destined to be replaced? Drop your thoughts in the comments, because this conversation is just as important as the prediction itself. If you found value in this breakdown, make sure to smash that like button, subscribe for more deep dives into crypto's future, and hit the notification bell so you don't miss the next one. Because in crypto, timing isn't just important, it's everything. The moves happen fast, and being prepared is the difference between watching from the sidelines and riding the wave. Until then, stay curious, stay cautious, and I'll see you at the peak of the next bull run.